Is the Morgan Hill and Gilroy market crashing? What does the data have to say about this? What do I have to say about this? We will dive into all of this in the video today. If we haven't met before, my name is Christa Nielsen with Real Broker, and welcome to my channel. Unless you've been living under a rock, you know that there's been some big changes in our real estate market, specifically to the Bay Area, and even more specifically to Morgan Hill and Gilroy, which is also known as the South County. Although you'll see in this video that prices haven't quite changed as much as people are hoping for, you will also see that the interest rates are definitely driving down the demand overall in our area. A lot of people are moving out of California. The suburban neighborhoods such as Morgan Hill and Gilroy are actually gaining popularity and have continued to do so through the pandemic. People are realizing they don't need to live 5 minutes away from the technology campuses or any other locations that they may need for work. They prefer to actually be a little further out, get a little more home for their money, and get a little bit better quality of life. Due to all of this demand, the year-over-year prices in South County have drastically gone up. Last year in September 2021, we saw an average price point for home values at $1,220,000, whereas September of 2022, this year, we saw an average price point in Morgan Hill and Gilroy of $1,426,000. Like I said before, because of the interest rates and a few other factors, the inventory has definitely changed, and so has the demand. In September 2021, we had a total amount of sold homes at 106, whereas this year, September 2022, we only saw a total of 84 homes sold. Now, year over year for homes that are actively on the market, September 2021, we saw 128 active homes on the market, whereas September 2022, we saw 162 homes on the market. So as you can see, more homes are staying on the market, less homes are actively selling, yet if you look at the data, there's a higher sales price average this year versus last. Now, of course, we have a lot of contributing factors to this right now. We have stock prices, we have inventory as a whole, interest rates, and general uncertainty in the market. So as you can see, the amount of homes being sold is less, but the price per home average is definitely staying up there. Now let's get a little bit more specific and look at just what the average sales price is for this past month versus June of 2022, which was a little bit closer to the peak of our prices. The average sales price in June of this year was $1,424,000. Whereas the average sales price in September of 2022 this year was $1,426,000. So as you can see, we're still at a little bit of a plateau. There hasn't been a major shift in the prices yet in this area. What we are seeing though is definitely more accessibility to negotiations. You're seeing more seller credits, more negotiation on prices, and just less competition as a whole. We're still seeing that homes that are marketed and priced correctly are selling at or above list price, and typically less than the average days on market. Speaking of average of days on market, let's look at what that looks like now versus a year ago. Last year in September 2021, we saw an average of 16 days on market. This year, this last month, we saw an average of 30 days on market. This is well within the norm. This is actually what we were seeing in late 2019, early 2020, before we went into the pandemic. Historically, 30 days on market is quote unquote normal. So something that a lot of people want to know, buying or selling really, is how much are homes selling for compared to how much they're listed for. So homes are selling for 98.7% of their list price. So really, really close to that list price. And my prediction is it's going to stay around that number as sellers become a little bit more realistic on the price point. If you go back to a year ago, homes were selling for 104.2% of the list price. And that, a lot of it was actually strategy. You'll see that homes were actually listed much lower than they anticipated them going to. What we also want to see is the supply, of course, in reference to the demand. year over year, and of course comparing to just a few months ago as well as the market started changing. There are currently 162 homes on the market. Compared to a year ago this time, there were 128 homes on the market. And you just backtrack to June of this year, there were 198 homes on the market. So there's definitely less to choose from this year over last. However, the homes that are sitting on the market a little bit longer than others are absolutely the best opportunity to find a deal. So I know I've mentioned interest rates a few times in this video. What does that actually mean? Interest rates are going to affect your monthly mortgage payment. So the higher the interest rate, of course, the higher your payment is going to be. Last year, people had much lower interest rates and they were paying a much higher purchase price, whereas this year we have higher interest rates and lower purchase price. If you want to know my opinion, it's always better to be in the realm of lower purchase price, higher interest rate, because historically prices do stay or increase, whereas interest rates will decrease again over time. There is no way to know exactly when this will be, but typically this will happen in the future. We are also still seeing some really interesting strategies behind this. If you get a seller credit, for example, during negotiations, you can actually buy down your interest rate to have a much lower rate than you would if you were just buying with no credit. So back to the original question. Is the South County market crashing? The data absolutely points to no crash. However, we are still seeing a cooling off in our market. With all of that said, don't forget to hit the subscribe button. If you are thinking about moving to this area or California as a whole, definitely shoot us a text at the number below or send us an email at info@christanielsengroup.com and my team would love to serve you. Once again, my name is Christa Nielsen with Real Broker in Silicon Valley, and I will see you soon.